Hi, I'm Jimmy. In this video, we're looking at the top value stocks going into 2023. The stock market's been down a lot this year, and I've begun to look for good investments that could be great long-term buy and hold types of investments. So this video is going to be our top 5 value stocks, and right after this, I'm looking for dividend stocks and growth stocks. So if you have any ideas, any good suggestions, please throw them in the comments below. Okay, now before we jump into that, I just want to show you real quick something interesting. This is the S&P 500 going back the past 20 years. And you can see, broadly speaking, the stock market has done fairly well, even with the most recent pullback. But we can actually break out this data from a year-to-year basis. And when we do, we can see that there's been a few pullbacks for the past 20 years. And a couple of interesting things struck my attention. First, each pullback was followed by a big up year the following year, which is interesting. We don't know what next year is going to bring, but if we look at history, overall, the stock market has recovered quite nicely. And one of these pullbacks is the financial crisis, the 2007 through about 2009. This is one of the worst pullbacks in the stock market's history. It bottomed out at about down 48, 49%. And yes, for the year was down about 37%. But again, to me, it's interesting how well the stock market has recovered in past years. Okay, now before we jump into our top 5 value stocks, I want to tell you real quick about an investing platform that we're building. So we've got our private investing community hosted over on Discord. On Discord, we got a whole bunch of different investing channels where we all talk, share ideas, do some research projects together, and ultimately try to get better as a community at investing. We also do a couple investing live streams, private investing live streams every week. We do a valuation live stream, we do a portfolio live stream where we talk about my portfolio, we build the different portfolios. Plus we do a research live stream where we try to analyze companies together and go through the process together so we could all get better at it. Okay, now let me tell you about the website that we're building. So we already built the beta version of our discounted cash flow calculator. And the idea is that we would have a website that has a bunch of different valuation methods. So it could be, how do you value banks? How do you value a large cap company? How do you value a real estate company? How do you value a company with no growth or negative free cash flow or negative profits? There's different ways to value all different types of companies. So that's where the website's trying to go. For now, we've already got the beta version of the DCF calculator up there. We're just going to keep adding from there. Now, if you'd like to sign up to get access to our investing community as well as the website, I will leave a link in the description below. Okay, now let's jump into our top 5 value stocks. By the way, all 5 of these value stocks came directly out of the investing community we were talking about before. Okay, the first company is called the Pulte Group, ticker symbol PHM. So the Pulte Group is a home builder. They build homes, they sell those homes, they buy and sell land, they build active adult communities. They also do some mortgage financing for some of their customers. Although I checked last year's financials and about 97% of the revenue came from their home building activities. We could see that the stock looks fairly undervalued. It's got a current price right below $50 per share. The fair value after debt and cash is coming in at about $71 per share. They also have a small dividend of about 1.3%. So again, that looks fairly interesting. To me, home builders could be really interesting because the housing market has struggled. As the Federal Reserve has increased interest rates and interest rates have gone up against housing, well, many housing stocks have pulled back. This could lead to a big opportunity because as the housing market struggles, well, what happens when the Fed goes too far? And they probably will. And then they have to reduce interest rates. If they start reducing interest rates, once they do, well, the housing market's likely to recover. So if we could jump in and possibly do the research to see if a company like this could be a good buy and hold for the long term, well, a home builder like this could be a great one. Okay, now let's jump over to our next value stock. This is a Celanese Corporation, ticker symbol CE. Now this one, you might see, looks a little bit different because I actually did an in-depth video on this company. This is a company that is in the chemicals industry, and it's a company I really like. I actually added this company to my bullpen. I have not personally bought it yet, only because I'm actually completing my research on some of their competitors, and I want to be able to compare apples to apples. But based on my research, it looked like an interesting company, and perhaps it could be a good fit for your investment portfolio. Now, one of the changes that I think is necessary to make to this particular calculation for discounted cash flow. By the way, if I didn't mention this before, this is a DCF calculator we talked about a few minutes ago. But basically, back in February of 2022, Celanese announced that they were buying the mobility and materials segment coming out of DuPont. They were going to pay $11 billion in cash for it. Well, that deal closed in November of 2022, so just a couple months ago. And interestingly, their last quarterly numbers came in at the end of September, so right before the deal closed. We can see, have about $9.6 billion in cash, but they didn't always have that. They had actually gone out and raised money because they needed cash to make the acquisition. So on the debt side, they went from about $4 billion to about $12.5 billion. On the cash side, they went from about $500 million to about $9.6 billion. But since we know after the end of the quarter, which is where these numbers come from, at the end of the quarter, they would have had to have paid that money to DuPont. So I think a more conservative approach for us to make is to assume that they have none of that cash remaining, which means we have to deduct the value of that cash from our current calculation. Well, if we take that $9.6 billion in cash, divide it by the shares outstanding, well, we can see we get a fair value reduction of about $89 per share. So when we get the fair value of $246 per share, we chop off the $89 per share, we end up with a new adjusted fair value of about $157. To me, this is a much more logical fair value. And compared to the stock price of about $100 per share, it looks obscenely undervalued at the current level. Plus, bonus, it pays about a 2.7% dividend yield. Okay, next up, we've got CVR Energy, ticker symbol CVI. Now, this company is actually in the downstream energy industry. Basically, what that means is that they are a refiner and marketer of oil and gas and similar related products. Marketer is, picture gas stations. That's marketing for the oil and gas industry. Usually, these companies end up paying pretty good dividends because most of them are set up as master limited partnerships. So they get tax advantages if they pay high levels of dividends. Now, there can be some complicated tax implications for some investors. So if this is a stock you're interested in, take a peek at that before you go too far too fast. But from a value perspective, the stock is trading at about $30 per share. The fair value looks like it's about 46. Now, I've only got on the website, we've only got one analyst. And according to those numbers, by the way, those numbers are actually going down. The reason they're going down is because many people are expecting oil prices to continue to fall, gasoline prices, and some of the spreads that refiners need to make more money. If those spreads go down, they'll make less profit, ultimately have less free cash flow. But even with that, the stock still looks obscenely undervalued or fairly undervalued. But there's only one analyst. So I think we have to, usually I like the more the better as far as number of analysts go. I actually double checked and looked into some other places that I thought might have analyst estimates. And each of them that I found a couple others, and each of them that I found were higher than these two numbers. So if anything, these numbers are a bit more conservative. Plus, like we mentioned before, this company has a pretty good dividend yield coming in a bit over 4%. Okay, then we've got Broadcom, ticker symbol AVGO. So we can see Broadcom is currently priced at about $5.50 per share. They got a fair value of about $5.78 per share. Now, they've consistently paid out a pretty good dividend, about 3%, and they've consistently increased that dividend every year, like they do every fourth quarters, they increase it again. And the dividend's actually been fairly reliable for a very long time. Now, if we're curious, this company's in the semiconductor space, and they make a ton of different products spanning the entire semiconductor place. And it's a company that I've watched for a long time. It's been a while since I did a deep dive. If you'd like to see a deep dive, let me know in the comments below. But I've liked this company for a long time, and it's interesting that it appears to be undervalued now. Okay, next we have another large, more established technology type of company, and that is Cisco, ticker symbol CSCO. So we can see Cisco's trading at about $47 per share. The fair value is coming in about $61 per share. We can see when we look at the number of analysts we have, there seem to be a decent amount of analysts covering it. So their projections seem, the more analysts we have, generally the more reliable I think those projections tend to be. Now, Cisco tends to focus in the networking side of technology. Picture any modems, routers, things like that. Cisco has a lot of different products there. They have a lot to do with network security. They have a lot of software development. Again, this is another reliable company that pays a decent dividend of about 3%, and it looks like it's trading at a value. So this could be one of those, similar to Broadcom, that could be a good long-term buy and hold when it comes to value stocks. Okay, so now we're going to be working on our dividend stocks, and as you might have noticed, all of these pay dividends, but if you have any good dividend stock ideas, or even growth stock ideas that hopefully are also somewhat undervalued, the market is down, we might as well buy undervalued stocks. If you have any ideas, please let us know in the comments below. And if you'd like to sign up to get access to the website, leave a link right here, link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.